In this video, we'll learn how to catch sniper entries. By sniper entries, we mean extreme entries at the market points like these ones. This is a very big advantage in your trading because it actually gives you a very small trading stop loss, thereby allowing you to get a higher risk to reward ratio. So sit back, relax, and learn something new. Firstly, I'll actually make you or actually ask you to listen to this. Profitable trading is difficult, and successful traders share specific characteristics. The biggest characteristic of successful trading is self-discipline. Discipline can be taught in a seminar, or I myself cannot teach you how to discipline yourself. Whatever wrong in your life will eventually carry over into your trading performance. So make sure you come into this business with a pure mind. For the sniper entry method we'll talk about, one needs a lot of discipline to execute it efficiently because you sometimes wait for long periods of time for you to get the sniper entry. So here's the strategy definition. These are the steps that you are going to be following for you to execute it properly. The first thing is to go on the H1 time frame. Our goal is to trade off the exact turning point of the market, that is at level 3 first 10. By that we are saying the market usually issues 3 levels of drop or rise before it makes a turn. So our goal is to actually get in at this first 10 because in most of the cases we would see the market does not come back to this point. So after seeing level 1 and 2, we must see level 3 starting as a bounce on the 50 EMA as shown in the next slide. So what we are saying in short is within this cycle, we need to see 2 bounces on the 50 EMA, bounce at that point, another bounce at that point. The second bounce will actually give us a reason to call it level 3, or it will actually prepare us that the market is now flowing in level 3. So what we are saying is the market should actually give us the first bounce and then the second bounce to signify that we are now in this particular level. So on the second bounce, that is where we are now, or we must now magnify the markets to prepare ourselves for market entry. The fourth step is from the third level 50 EMA bounce at this point. This bounce on the 50 EMA, you need to observe 13 EMA bounces as shown. From the second bounce on the EMA, on the 50 EMA, you now need to look closely on the market so that you see 2 13 EMA bounces. If you see the first this bounce, the next thing is now to see the market come back to the 13, which is in red. So the 50 is the one in blue, the 13 in red. So you need 2 13 EMA bounces on the red like that. Then after this bounce, you now need to switch to lower time frame, which is the M1 time frame, where you are now going to stalk for a W pattern in this market context for you to enter in a long position. So here is how you make your entry. An entry is made after the second H1 13 EMA bounce within the third level. So we've said the first thing is to see 2 bounces, 1, 2 on the 50 EMA, 50 EMA, 50 EMA. On this second bounce, you now need to wait and see 2 bounces on the 13. Bounce, bounce, and then you now wait for an M or W for this particular context on the M1 time frame. So as soon as you see the second 13 EMA bounce, which is this one, switch to the M1 time frame and then look for either an M or W and enter its second leg. If we are on a rise, we'll be looking for an M, obviously, and on a drop, it's a W. So let's now go over the charts to see how it's done. But before we do so, check out our free Telegram channel. I'll leave the link in the description box below. So this is gold, and we are going to use it for illustration. The first thing that I've said is to mark our levels. and our levels can be segmented using the 50 EMA bounces. We are now looking for quality. That is why we are looking for 50 EMA bounce. We can see the first drop. After that first drop, we had a 50 EMA bounce at this point. Then our next drop was actually issued and a 50 EMA bounce was also seen. When we see two 50 EMA bounces within the same cycle, it actually signifies that the market is almost at a point of reversal. So after this bounce, we now start to look for a 13 EMA bounce by 2. So we had a floor, a bounce to the 13, a floor, a bounce to the 13. From this bounce, that is where we now start to look for an M1W pattern in this particular case. So within this third level, we were now starting to look for an M1 pattern. The M1 pattern will actually give us this is our first leg and this is our second leg. Therefore, our entry was going to be made at this week. This is where we were going to make our entry. If we switch to the M1, it's unfortunate that this is in August and we won't be able to reach that on the M1 time frame properly. So let's have another example. We've said we look for two 50 EMA bounds. In this particular cycle, it was not valid. Why? Because there was first 50 EMA bounds and there was no 50 EMA bounds. So it was a skip, right? We can see at this point, we had, it was almost a week and a half from the previous entry. We had the first rise, which was this one, and a 50 EMA bounce. First 50 EMA bounce, then second 50 EMA bounce was issued, and from there we can see that from the second one we wanted 1, 2, right, within the last H1 level. So it's 1, 2, then 1, 2, 1, 2, and then 1, 2, and the last two will be on the 13, not on the 50. So it's 1, 2 on the 50, 1, 2 on the 13, like that. And after the second 13 EMA bounce, we now look for an M1W in this case. So our M1W was probably going to be at this white line. This is where it was going to be, right? And our entry was going to be on that point. So to summarize everything that we've talked about, it's 1, 2, 1, 2, 1, 2 on the 50, 1, 2 on the 13, like that. Basically, that is how you can catch these sniper entries. But as I've said earlier, it requires you to be highly disciplined, because there's no one ever made money out of this business without that. See you on the next one, and don't forget to check out our free Telegram channel. I'll leave the link in the description box below.